Hello guys, welcome back to the channel TTL Forex. I'm Precious, and today's video I'm going to share with you guys how to use the MACD and the RSI indicator to analyze and trade Crash 1000 index successfully. But before I go into that, check out this quick disclaimer. Alright, welcome back and let's get started. The reason I love using MACD and the RSI indicator is because of their accuracy. Alright, these two indicators are good for detecting spikes and taking short candlesticks on the market, and that's why I like them the most. So let me show you guys how well these two indicators works together. Alright, so when trading with the MACD indicator on Crash 1000 index, which is the main indicator we're going to use, and the RSI, we're going to use the RSI to level the MACD indicator for a sharp entry and exit position. Right, when you're trading with MACD indicator during the first MACD, it's very hard for spike to occur during this point. Okay, it's very difficult to notice a spike at this point. Well, a spike don't usually occur during that point. Okay, if you take a look at these indicators on the back trend, like on the previous market, if you go back to the previous chart, you see that every MACD during the first trend you won't see a spike. Okay, because that's how this indicator works on the market. The spike don't always occur during the first MACD, but it happens at the middle, and it mainly happens when the MACD crosses above this level of 90 of the RSI. That's why you see right here I put level 90 at this position and also level 10. Okay, but I only use the level 90 for a sharp exit. Okay, so that I'll be able to spot a spike. So immediately the MACD crosses this level, or it touches this level of 90 of the RSI, a spike will occur. If you look at this point right here, if I zoom clearly, you will see that when the MACD touches this line right here, it took about 2 candlesticks before the spike occurred right here at this point. Okay, but however, a spike might still occur if the MACD did not touch this line. Okay, so that's forex trading for you. The market don't always go the way you predict it to go. Okay, but with these indicators we can clearly get a good understanding of how the market works. Okay, so just as you can see guys, so clearly for a quick illustration, you can clearly see that at this point immediately it touches this level 90, there was a spike. After 1 candlesticks there was a spike, right? And on the first MACD there's no spike. Okay, the spike doesn't occur. And also guys, during a downtrend on the MACD on Crash 1000 index, spikes always occurs. Okay, there's no indicator that you can use to predict the spike, but on the uptrend of the MACD you can predict the spike when the MACD touches or crosses the level 90. A spike will occur, because that always happens, because the indicator always shows that spike always happen during that point. Okay, but during a downtrend you can't notice when the spike will occur. All right, so that's why if you check right here, you can clearly see that during each downtrend of the MACD there's a lot of spikes. Okay, so there's a lot of spikes. So for example, if you're trading on Crash 1000 index and you have been using the MACD indicator, you will know that during a downtrend spikes always occur, and there's no way you can check if the spike will occur, or there's no way you can predict the spike during the downtrend of the MACD indicator. All right, you can only predict it in an uptrend when it touches that level of 90. However, the spike may occur even if the MACD did not touch the level of 90 in an uptrend, but it's very rare. Okay, just as you can see. All right, so clearly guys, on the first MACD, only the first MACD, what I mean by the first MACD is that the first MACD after a downtrend, you can clearly see that after this downtrend there's a MACD at the top. All right, and when it crosses this level, or when it touches level, a spike occur. Okay, just as you can see. So even though the first MACD occur, it might break through. Okay, let's say for example a spike occur during this point, right? Let's mark this point real quick. A spike occur during this point, and you see right here there's another breakthrough at this point. Guys, you can clearly see that there's a breakthrough here on this line right here, just as you can see. So during this first MACD line, another line might go up at this point. Okay, so for example, you see this is the first MACD and it break down, and another MACD starts creating an uptrend again. Okay, during that MACD, guys, spikes will occur too. All right, I hope you understand what I'm saying. Okay, spike will occur too during that point. So I'm just trying to explain to you guys that this MACD is a very good indicator. All right, but these are the points and the things you need to know about this indicator. Okay, so some of you guys might not know this. That's why I'm telling you guys about this indicator. Okay, it's a very good indicator which I use to trade. All right, so guys, I'm going to show you guys the settings real quick, because I do get comments like you made a video and you didn't show the setup for the indicators you use. So I'm going to show the settings real quick for the MACD. You can see clearly here at 12:26:9 why I applied to close, and the main is black, while the signal I use the color of my screen, which is white right here, just as you can see. Okay, then I apply to all time frames as well. Okay, then the levels is empty. Then after that, done. Then the RSI is period on 14, or I apply to close, and the levels on 90 and 10. Right, so the reason why I put sell on this point is because when the MACD crosses or touches the level of 90, it will give a sell signal. All right, it will give a sell signal for a sell. Okay, that's when the spike occurs. So anybody that is trading to catch the spikes during that point is when you want to catch your spikes. All right, then if you are avoiding spike, immediately that MACD crosses or touch the level of 90, a spike will occur. So that is a signal which the indicator give for you to avoid the spike if you are trading against the spike. All right, then the buy is when the level touch the 10, which is not necessary because we're not using the level of 10, only the level of 9. So I hope you understand what I said, guys. And you can clearly see that the style right here is on 1 pixel and the color is black, right? Just as you can see. Then after that, you click on done. Okay, can see the sell right here and the buy, but we're only using the sell. Okay, the reason I put this buy here is because I use the average true range on other index like boom 500, crash 500, crash 300. I use the average true range to trade as well. Okay, but I'm just showing you guys because this is my setup for the RSI, but mainly for this MACD indicator I only use the sell and this uptrend. Okay, I don't use this down trade because I don't catch spike on the market. So during this point, you don't know when the spike occurs, because if you want to trade the spike, if you want to catch the spike and you take a sell on a down trade, you won't know when the spike will occur. As you can see right here, before the spike occurred during a down trade, you can see how long it took before a spike occurred, and right here again how long it took before a spike occurs. So there's no signal that you can use to detect the spike, but only in an uptrend, immediately it touches crosses here, that's when the spike occurs. All right, so guys, I hope you understand what I've just said in this video. Alright, so if you find value in this video and you really enjoyed watching this video, do well to like and subscribe to this channel. I will see you guys on the next video on the Daily Forex.